All right, today we've got Arizona Eagle Mining and the CEO Kevin Reid to walk us through the opportunity. Kevin, please go ahead.
Oh, thank you, Matt. Hello, everyone. Thank you for taking the time to listen to our presentation here today. I'll start with a quick overview of Arizona Eagle, what we're doing, and then I'll talk about myself and get into the project. And also the very exciting announcement we had Monday, which was the acquisition of three past-producing high-grade silver mines, which we announced on Monday. So I'll get into all that. First and foremost, my name is Kevin Reid. My background is I'm a geoscientist by training, worked in the field in the 90s across Canada, went back and did an MBA in finance in Toronto, and then ended up in equity research in the mining team at CIBC, where I went to Griffiths McBurney and Partners, where it became GMP Securities, where I got to work on a vast number of deals, anyway from the origination of Silver Wheaton is what it was originally called, but we did the Wheaton River IPO. I did the $144 million bought deal for Gold Corp in April of 2002. Sorry, 2002. Yeah, it was that long ago. But I spent 17 years doing all kinds of transactions and was really involved as a banker on the Klondex financings. That was an ultimate sale, working on the Midas transaction and numerous bought deals. So I have a plethora of experience in the corporate finance world, doing mining and M&A. But really, my love is my original love is geology and exploration. And we've done this a few times. The first deal we put together with my brother and Mark Pace as the founders of this company was the Castle Mountain Mining Company. We did a reverse takeover, Shell put in management, and through a series of transactions, it ended up in Equinox Gold. And I remember at the time that when this is going back well over 10 years ago now, when we put it together, folks said, this will never be in production. And here it is, back in production. And then we did the Arizona Metals, which was similar by the same founders. We IPO'd that at around $20 million valuation, and it traded hundreds of millions of dollars for a couple of years, as high as $700 million valuation. Management changed approximately 2 years ago, bringing in more mine builders, PEA study mine builder types. And now it brings me to this deal, and this is for me the most exciting transaction that we've gotten to work on as principals. I'm the CEO of the company, bringing a lot of my geological exploration background and my corporate finance background with the team to take a high grade, past producing mine in mining friendly Arizona and bring life to it again. There's a lot of history with this deposit, and I'll get into that. So it's a really exciting opportunity. The company is new. It was really founded on this anchor asset, the McCabe high-grade gold and silver mine, that has been in production as recently as the 1990s. And I'll get into the history there. But yeah, that was the anchor asset. And then we went about, and I'll show you, assembling a significant private land package as well as a BLM land package. And I'll get into it. So forward-looking statements, our disclaimer, just a quick picture. This is from, and I'll get to how it ended up in BHP, but this is taken directly out of the 1996 BHP annual report. The asset ended up in BHP, and as I go through a bit of the history, I'll explain how. So, high level, our company, we've done a strategic acquisition. It's on private ground. It's a past producer. It's high grade. It's open in all directions, and it's been dormant for over 30 years. In fact, close to 40 years, and it's been held by one. It was held by one private individual, which we spent a good 3 years negotiating a deal on. And unfortunately, he passed a couple of years ago, and we ended up negotiating with the trust essentially, and a few different parties. But we looked at many projects, and as a result of my career and my colleagues' careers, we see a lot of things. And for us, it has to check the boxes for us to get involved. We don't get involved in many things. It's usually one thing every 5 or 6 years, and hopefully we have an exit. So for here, the plan is very similar to that. Is we found a very interesting asset. It checks the boxes in terms of being on private ground, the ability to permit, a history of production, a known historic resource done by world-class folks at the time, and open in all directions. So we've taken what's nearly 1 million ounces in historic estimates, and I'll get into more of the details there, over 800 meters, and we've assembled 10 times that ground just on private ground. And I'll get to it, but we have 14 historic shafts across this project just on our private ground. We have another 4,000 acres of BLM ground, Bureau of Land Management ground, that we get to explore. But that's the crux of it. We're a past producer. It's high grade. It has this. The system has multiple structures, and I'll get into the geology later on. Multiple parallel high grade structures, incredible infrastructure. You drive north 2 hours from Phoenix, and you go into the basically across from the town of Dewey Humboldt, where the Dewey Humboldt smelter was. And which has nothing to do with us, but it's in the vicinity. It's in the area. You drive by it, and on a very good dirt road you can take any car to. I can have you at the shaft, the Sooner shaft, where the last known production was going to take place, which was closed in 1993. We've got district scale. We've got incredibly interesting copper targets, which I'll also get to. But as I mentioned, on Monday, we announced the acquisition of 3 past producing high grade silver mines, which are on strike between the McCabe mine and the Iron King mine. So they haven't been operated since the 30s. They've been dormant and in private hands. We've sampled them at surface, and our intention obviously is to drill them. High level, why are there so many shafts on these structures? In the late 1800s, as you know, the California gold rush came to Arizona. They were looking for gold and copper and silver, and they found it. In this area, you would have many parcels separated by private landowners. That's just the way it was, and that's the way it remained. We've gone through and assembled this package, which I'll get to. But in the old days, they would mine down to essentially where the oxide sulfide transition occurred. So you'll see in some areas these shafts will go down as deep as 500 feet in that area. They would hit the sulfide mineralization. They could no longer recover it by gravity and mercury. So they would move on and they would go to the next and they take it down again. So what we view this is as, yeah, there's lots of past producing mines on our property. There still are, very small. But what we've done is we've assembled them all the structure. And our opportunity obviously is to go and say, what was left in the oxide? Sure, along strike. But how much more can we find below that 300-foot level? We know the Iron King mine was mined to a kilometer. These mines have only been mined in the oxide to 150 meters. So the opportunity is to expand the known historic resource in all directions and in multiple structures, and to show the market that this isn't 1 million ounces of high grade. This has the opportunity to be many millions of ounces of high grade on private ground with second to none infrastructure in a known mining camp. So that is the high level what we're doing here. I'll get into some more of the details. This is where we are. So as you can see, we're basically due north of Phoenix as a crow flies. And this is a bit more of a zoomed in picture. I'll zoom out in a moment, but you can see some of the mines that are in our area. Iron King, we drive right by. Again, it's a Superfund site, has nothing to do with us, but that was the smelter where tons and tons of material were taken over many years, from the early 1900s until the 60s. Zooming out, many of these assets you'll know if you're in the mining business, of course, familiar names like Freeport, BHP, Capstone, Asarco, Hudbay. So lots of copper in this area, as we know. And it's hard not to notice that you've got this trend that runs for hundreds of kilometers from the bottom of the page to the top of the page. And we happen to be in that trend. High level geology here, folks, like Proterozoic, volcanogenic massive sulfides. So I'm Kevin. I've given you my background. I've got a geological science background, but really most of my career, 95% of my career was in the capital markets, and which led me here. I really wanted to get back into the exploration game. I wanted to be involved in one asset and seeing how it could evolve, what we could find, and where we can take it. I've spent my whole career financing other people's dreams, getting them equity funding, advancing their projects, ultimately selling those assets. So I did that for a really long time. I enjoyed it. I got to travel the world, but it was really time for me to get into something that I could really sink my teeth into and have some fun with. You know, this is what this is about. We want to have some fun at the end of the day, and I think we're going to have a lot of fun here. Clyde Smith, 40 plus years in the geo game. His resume speaks for itself, but he's been all over the Southwest U.S. In fact, has made 4 discoveries himself. John Barber, again 40 plus years in the mining game. He's worked at some of the biggest operations in the world. He's a technical advisor. He's been to the site a couple times. Most recently he was at Arizona Mining, which was sold to South 32. He's worked at Grasberg. He's worked at AMEC Managing Studies. Tremendous resource, and we're so happy to have him on board just as someone we can talk to about things. He's given us a couple desktop studies on mining and shaft rehabilitation, so he's been a great resource for us. In terms of the board, Mark Pace, another Queens grad. He's a little bit younger than I am, so I wasn't there at the same time, but he did a geoengineering degree, spent many years in the capital markets as an equity research analyst, covering many companies. Like me, he's been to sites all over the world looking at assets. So he has, as far as I'm concerned, an incredible nose for what works and what doesn't work. I mean, he's the guy who will tell you like, oh, that doesn't, I'll talk to him about a project. And he'll go, oh, the one that's on a glacier or next to a this, or he just knows all these projects extremely well. So he's a fantastic resource, and also very financially savvy. Dawn Mediger, she has a legal background. She's critical to our board. She knows the ins and outs of permitting in Arizona. Although our permitting process right now is very simple, all our surface disturbance is on private ground, the ground that we own, and we intend for that to continue, even should this become a mining operation. Back in the 80s, when Stan West put this mine back into production, I'm speaking about the McCabe mine. They just used surface disturbance. They only needed 10 acres of surface disturbance, but it was on private ground. We've assembled approximately 420 acres of private ground. So we don't foresee a scenario where we're going to need a plan of operations from BLM. Of course, if we want to hit a target on the BLM ground, that would be required. But for our immediate and medium term drilling, we've got 10 drill pads on our project. We've rehabbed our roads. We got a drill permit in 48 hours. So all that is a huge advantage for us being on private ground. But Don has been an incredible addition to our board. Mike Pilmer, we've known him for many, many years. He started out his investment banking career with Rick, who's also on our board. So that's the relationship. Phenomenal business career, many senior positions, worked in investment banking at TD, and that's where he met Rick. Stronach Group, as you can see from his bio here, most recently President CEO of LexisNexis. And Rick Vernon, actually my brother, one of the founders of the company, started his investment banking career with Rick in the mining group. And Rick, like me, similar background, and similar to Mark as well, geo background, MBA in finance, and decades of corporate finance. So that's the team, and it's a pretty new company, but I think we've assembled a great team. The guys on the ground, all being directed under Clyde. Our geological team, we have PhDs, master's level geologists with many, many years of experience that we've worked with before, running our geo program, targeting, and I'll get into some of that later, but we've got a phenomenal team on the ground. Corporate structure. Significant ownership by management in the team, the founders, myself, my brother, and Mark. We have taken 0 salaries out of this company. All our money has gone into the company personally to the tune of $2 million each. Rick has, I think, put another $500,000 in. The most recent financing at $1.20, which is where the stock's trading, personally invested $400,000, and Mark and Rick and Paul collectively, I believe, over $1 million collectively on the last financing. So we've invested on all the rounds. We've been incredibly supportive. We are here for our return with our shareholders. We are not here for fancy dinners and going to conferences. Our objective here is to make these shares worth more money. That is it. However we can do that, that is our intent. Any decision we make, you will know that our decisions are in alignment with our shareholders because we're the largest shareholders and we've written very, very meaningful checks, which not all our wives were incredibly thrilled about, if I can be completely honest, but they were made anyway. Options and warrants, 4.7 million warrants. The last round we did was a $1.20. It came with a full warrant at $1.50. And there were other warrants from the shell, which have an exercise price of $2.55. So those warrants are out of the money and they would bring in approximately $10 million. So that's the capital structure, significant insider ownership. The warrants right now are anti-dilutive. So getting into it, the McCabe mine, the historic estimate. So I want to be clear, this is a historic estimate. It was done in 1984 by Derry, Michener, Booth, and Wall. That was a Toronto outfit, but like many Toronto consulting companies, they consulted globally. Dr. Derry, I believe, I read somewhere that he's in the Canadian Mining Hall of Fame. I didn't graduate from geology until 95, so this is well before my time. It's reported this way because we are required to report it this way. This resource is broken out into proven, possible, and geological potential, which would be loosely compared to geologically inferred. So this is historic in nature. It has, I'll get to the samples and how they came to it, but it's historic in nature and it's not to be relied on. We really see this project as an exceptional brownfield exploration project. This is not something we are planning or have any intention of putting into production in the near term. Our objective is to say this has a really interesting historic estimate. The McCabe mine has 3 shafts on it. The deepest goes to 1,450 feet, and I'll get to it. But we have samples at 480 meters, which is below the deepest extension of the shaft, that run 1.4 meters of 19 grams per ton. So we know it's open at depth because we've got an intercept at depth. We know it's open on strike because there's past producing and drill results on strike. So that's why I'm very excited by the opportunity. For shareholders, for investors, if I walked in, with 1 million ounces of 43,101 ounces, it wouldn't be a 60 million Canadian market cap. So the opportunity is for folks like us that hopefully can get ahead of the curve is to say, there's a lot of gold here. It's high grade. It's in a place we know we can mine. Can we find more? That's what this is about. It's exploration. It's using the drill bit to create value. And it's our job. We're on hole number 7. I'll get to that in a minute. It's our job to show it's there, to show, maybe a bigger company. But this is a type of operation where it would be, at most, really 1,000 tons per day. It's not a huge operation. It's something that you could put a team around if you did want to go it alone. So here's the Eagle project in its entirety. The blue claims represent the BLM ground. And I'll use my pointer here to circle things. North is up. This is the past producing Iron King mine that I mentioned. It had a smelter on it, the Dewey Humboldt smelter, and it's a Superfund site. It has an environmental legacy. It's not ours. We've spoken to people. I've spoken to the council at Dewey Humboldt. All they really ask us for is any kind of advice that we can give them on how they should proceed with it. But we're very constructive and obviously very helpful, and the council have been very supportive of our operations so far. We have one drill. It's pretty straightforward. But here's our project. The green claims represent the silver projects, and I'll zoom in on them in a minute. The silver projects we announced on Monday. As you can see, there's this trend that runs right through McCabe down to the California mine. So what we've done is we've consolidated 4.5 kilometers of strike length of this structure. The 800,000, again, I'll get into this a little bit. I'll get into it now, actually, when I should have talked when I spoke about the resource. The red area is the 800,000 historic estimate. That's over approximately 800 meters. It's important to point out a couple things. The historic estimate is a grade of 11.7 grams per ton gold and 69 grams per ton silver. What's interesting about that is that's the recovered grade. That is the grade that came out the back end of the mill. So if you use mine dilution, which is what we've discovered from the records in our homework, is mine dilution was approximately 85%. Or sorry, mine dilution was approximately 15%, and mill recoveries were approximately 85%. Now, we believe in, modern mining methods and modern processing methods. I'm sure we could do better than that. In fact, some experts I know in the field would have told me such, but it's not 43101. Anecdotally, we could probably do better than that. So the head grade wasn't 11.7 grams. The head grade was closer to 15 grams. So that's over the 800 meters. So what we've done is we've consolidated, well, nearly 6 times that strike length with past producing mines all across the structure. So for us as explorationists, as venture, as entrepreneurs, what we're putting together here is a story that, well, look, we've got just down to 400 meters, we've got almost 1 million ounces if we use, well, actually more than 15 if we use 15 grams based on the historic estimate. How much gold do we have to explore here when we have 6 times the strike length? The Iron King mine was mined to a kilometer. The deepest hole, oh, sorry, going the wrong way. The deepest hole here was at 480 meters below the resource, and it was at 19.4 grams per ton. So we know it's open at depth. We know it's open on strike. So as entrepreneurs, as geo enthusiasts, we see there to be a significant exploration opportunity here, which, in my view, investors aren't really aware of. We've only been listed for 2 weeks. We're just starting to get the story out. The opportunity for investors is, is Reid right? Is Reid and the team right? Are they going to be able to show the market that there's more than, let's say we could show the market there's 1 million ounces of high grade. If we could do that, I believe the stock is dramatically undervalued based on the comparables. But if we can show the market that it's not just here, it's here, it's here, it's here, it's here, it's here, it's here. That's just on the private ground. And that would take us a lot of years and a lot of drilling, which is great because that's where we drive value. We wouldn't have to deal with not that BLM is anything wrong with it, but we wouldn't have to do a plan of operations. It's a faster path to production. Zooming in on that red area I spoke about, this is the Sooner Shaft. This was sunk by a company called Stan West Mining in 1980. Stan West Mining was a venture capitalist and a PhD geo that knew a lot about mesothermal gold systems. And when gold hit $800, they went looking for gold projects. And this is what they found. They didn't drill it. And this happened in Ontario too, with the flow-through financings that were available in Red Lake and other places. They just sunk a shaft. So they sunk the shaft down to 850 level and they went to work mining. And, they had some love, but as you know from history, gold prices didn't stay at 800 very long, quickly went into the 400s and the 300s, and mining financing dried up. Mining financing, and I've read that because I've read their annual reports. It says in 1984, there's a malaise for mining, equity funding's difficult. They do a JV with a company called Santa Fe Mining, which went into Nevada, had a lot of success in Nevada. But they did a $15 million JV for 50%. They walk after a year. They don't feel like they're getting, it's meeting their requirements. They go into a debt deal to continue to fund the underground operations. So keep in mind, this mine is under stress. They haven't properly developed the number. You need stopes to drive feed to the mill. You got to feed the mill. It's hungry. So they haven't got the capital to do this proper stope development is really how we've recreated the record. And we've had some conversations with folks that work there. So what we believe is happening is they're robbing pillars. They're not doing proper development. What happens? Well, they have when I've looked it up on the Weather Network, they had a 1 in 100 year monsoon. It's rain, and it's actually from the surface, from the skies. They get I think we believe the fault was activated and the secondary egress collapses. So it's literally just one thing after another. They're in a distressed environment for mining. No one's writing checks. They do a debt deal. They're robbing pillars just to keep the lights on. Um, then you get this problem. The secondary egress collapses. They've got a $10 million note they can't repay, and now a new $2 million capex that they have no chance of funding. So the mine is in default. It ultimately gets acquired by Magma Copper. Magma Copper was spun out of BHP in Newmont in 1987 to monetize their copper assets. They're doing really well. And in the early 90s, they buy this. The Newmont gold geologists can't help themselves. They go looking for a gold project. They buy this. Fast forward, BHP acquires Magma. Magma is one of the top copper producers in the world. Copper's around $1.20 a pound. They pay $3 billion for Magma Copper and go build Escondida. So this project ends up in a geologist's hands, a Newmont geologist's hands, where it sits for 30 years. We're almost about to do a deal with him. We literally have a deal signed. He goes in for minor surgery and passes away on the weekend. And then we didn't hear from his widow for a better part of a year. We ended up, anyways, complicated process, but that's the history, and that's how we ended up with it. And that's where I started. That was the shaft sunk by Stan West back in 1980. These other shafts were sunk in the early 1900s. And what we have here really is a phenomenal exploration footprint. As I mentioned, you have these mines. You can see the pickaxes, the Lookout mine, the Idaho mine. Little kicker, our drill is now here, by the way. We're drilling down into this area. We put 6 holes outside of the resource we just completed on the northeast edge, not in the historic estimate. Outside of it, we put 6 holes. We've moved the drill 2 kilometers to the southwest to test the other end of it. We don't want to go to the market and say we're just drilling into these old things. We're showing the market, can we hit out here? Can we hit out here? So we want to paint the picture that there's more gold here, guys. And we believe that the old timers did a phenomenal job of giving us an exploration blueprint. There's the old California mine. There's the Columbia mine. There's the Little Jesse mine. There's the Palo Alto, Sunol extension, and the Lookout. Again, they would mine down to the water table. When oxide turned to sulfide, they'd say, no, thank you, and throw it aside. And I'll get to that in a minute. This is our silver project. So I'm going to give you, just go back where we are. We've got 3 projects essentially on this property. We've got the gold project with McCabe as the anchor. We've got the copper project down here, which we grassroots discovered. It's not a deposit, it's an exploration target. And these past producing mines, the silver zone, the silver area of the Eagle Silver Zone, we just entered into a deal to acquire, and we announced that on Monday. Super exciting, on strike, past producing mines. Again, same old model. They mined high grade. We've sampled this. In fact, we got one sample, which you can see here in our sampling program, 15.6 grams per ton. Now that was from a dump. That wasn't from the mine. All the blue ones were from surface, outcrop. It's hard to find an outcrop, but we sampled outcrop here and we got 861 grams per ton silver for those that like silver, 300 grams silver, 500 grams silver, 3% zinc. Of course, zinc's associated, zinc and lead are associated with silver. As you go northeast on this direction, you run into the Iron King mine, which produced 1 million ounces of gold and 1 billion pounds of zinc. So this system is very productive, and that's just the fact. It's just, there's mines all over it. So our objective is to go in here and explore these high-grade silver mines, past producers, and see what else was left behind. That sample that I found was in a dump. They wouldn't have taken it. That would have been, we're in sulfide now. We can't do anything with this into the dump. Time to move on. This is a picture, this is a section just from the Stan West annual report. Stan West did do a deal on the Lookout mine. They had it at one point, and they were planning on working it before they had entered into that mining malaise I spoke about. But they had 2 shafts and they had underground workings. Again, the extent of the underground workings here, this is from their report, but this wasn't their work. This is from the 30s. The extent was 500 feet, which is very shallow, only 150 meters. We view it as being the exploration potential to be no different than what the Iron King mine produced down to a kilometer just a mile away. So we see that as what's our upside? Our upside is it's open at depth. It's also open on strike. Here's the Arizona National Mine. Again, similar story, multiple shafts, underground workings, but to a very shallow underground, again, mining oxide where they could break it apart, crumble in your hands, essentially pan it. And what they couldn't pan, they would likely use mercury to get it. Burn off the mercury, you're left with gold and silver. Likely here, the historic record based on their mining, they always reported in dollars per ton back in the 30s because you had a fixed gold price. They were reporting $20 per ton, which would have been, oh, sorry, that's gold in gold terms, an ounce per ton in gold terms. But it was 20 ounces, 15 to 20 ounces per ton silver is what the record showed. And this is just a picture that we dug up on the Silver Belt mine, which is the third high-grade silver mine that we've acquired. Again, no modern exploration, held in private hands for the better part of a century. These small little land parcels on their own aren't very exciting, because they're small. But when you assemble a district and you put them all together on private ground, our view is it just becomes an exceptional exploration project where we had some really hardworking folks do a lot of good work. And fortunately, we have the record of that. Okay. I want to show you the long section. I'll take you back just quickly. Bear with me. This is this red area here. I'm going to show you the long section. So basically looking northwest at the side of this thing. And this is the Sooner shaft, the Gladstone shaft, and the McCabe shaft. These are the old shafts, Gladstone and McCabe. They were early 1900s era. And the Sooner shaft was the one sunk by Stan West in the 80s. They extended it. They were first at 850 level. They extended it to 1,450 feet. All these samples you can see, what we've done is, now we don't have any of the historical core. And I want to be clear about that. We've been trying to find it. It's 40 years ago. We've been looking, but we haven't been able to recover it. But what we do have, and we don't expect to, but what we do, and we're not relying on, this data is historic and it's meant to be treated as such. But what we've done is taken the samples, and our geologist has done a phenomenal job of recreating where all these samples came from in three-dimensional space, the grades, and creating a picture for us so we can use it for our exploration, essentially. But we haven't been drilling in this, and I'll get to that in a moment. But so what do we have here, Kevin? The question is, what do we have? Well, we had 1,600 samples. About 25 to 30% of that was from underground drilling. That would have been short drilling. So they had essentially 200,000 ounces of, call it, proven impossible, with the rest of it being geologically inferred. And the way all these high-grade mines work, and this is no exception, I've looked at many of them, from Peak in Australia, Louismin in Mexico, to any of these mines that are high-grade in nature. What they would do is, because drilling's expensive, they get 3 to 4 years of mine life, they go mining, and they be drilling and doing their homework to get the next 2 years. And then they just to stay ahead of it. And it was no different here. They had 4 to 5 years of mine life until the collapse, as I mentioned, but they had 4 to 5 years of mine life and they went mining. But we have 1,600 samples. Now, most of them are channel samples. So they're actually underground, cutting the face, taking the sample to the lab. So a lot of this is actual underground sampling. So it's not 43-101. It's how they came up with at the time. And they were very qualified people. And I think their work is good, but we can't rely on it. But that's what they were doing. They were sampling it, channel sampling it, and drilling it underground. Again, we don't have the core. We've done our level best to find it, but I suspect it being 40 years ago, it's found its way to some place we'll never find. But this is the interesting thing about this is when we look at the surface map, as I showed you, we're drilling here now, the little kicker shaft. This, again, all these small mines, which I really think these folks were just phenomenal explorationists for us. They didn't drill. They sampled oxide at surface. It ran. And if they were encouraged enough, they kept going and going and going and going and going and going until they hit sulfide. And then they said, we're done. We can't recover sulfide. We need a stamp mill. Anyone got one? No. Okay, they go to the next place and they'd mine oxide. So this is a phenomenal, I believe, exploration story. You can see these traces here. These are our first 6 holes that we've put in to show that it's, there's a fault here. We've learned there's a fault here, and that's all I'm going to say about it. But there's a fault here that's been engaged. I think it was engaged probably when the collapse happened, but there's been a 30 meter shift to the north, strike slip fault. So Idaho again. So it's open in both directions. And as we know, it's open at depth because we have our deepest intercept at 480 meters we could have gone back in and drilled this. We didn't, but it gave us the historic record shows 1.4 meters of nearly 20 grams per ton, a great hole by any standard. So what's exciting here is the extensions that we've purchased. We're calling our Eagle Silver Zone, and we're calling it the Eagle Silver Zone because these really are dominantly silver mines. Don't get me wrong, there's high grade gold. Of course, it's going to require exploration work, but they were predominantly silver. And when they're reported in the historic record, they were reported as silver mines. So it's interesting. It seems like we're going from high-grade gold across the system, transitioning into gold, silver, more high-grade silver, and then as we go northeast, we get into the Iron King mine. That was a base metal VMS deposit, but very high-grade gold and zinc and lead VMS deposit. It had silver credits, but it looks like the richest silver in the system was the 3 mines we've recently acquired. So we're super excited about it for a bunch of reasons. It almost doubles our strike length just on this McCabe system that we're calling this. So it just gives us so much more land to explore and to lock up. Having private ground is really critical. Okay, shifting gears. We did some geophysics when we acquired the project a little over a year and a half ago, just to get an idea. We did a geophysics and district, if you will, sampling program just to see what was out there. Went looking for outcrop. Where we found outcrop, we would sample it. But really looking for conductive bodies. As I mentioned, we don't have this ground, Iron King. As I mentioned, it's not ours. It's part of this Superfund site. So we didn't fly it. We couldn't fly it. But we know that was nearly 6 million tons. It was an operation that was in operation for decades. What our geologists, now based on this geophysics, we found some really interesting conductive bodies, the hot pink, if you will. And I'm going to focus in what we're calling our copper zone. This isn't why we bought the project. We bought the project because we love the McCabe high-grade gold mine on private ground, open in all directions. But we can't ignore seeing 28% copper at surface, 29 grams gold at surface, 653 grams silver at surface, multiple high-grade kind of metals we're looking for at surface here. So what do our geologists think? It's always important what the geologists think. So here's an opportunity for me to speak a little bit about the geology without getting too complicated for the viewers. Typically, these copper deposits in this area, over hundreds of kilometers, this is like a National Geographic undersea black smoker environment. You have an island arc environment, you have pillow basalts and all these other types of mafic and andesitic sediments being deposited on the oceans, on the seafloor. During this event, you're getting all kinds of metals, copper, zinc, lead, gold, all coming up from the mantle and being spewed out on the silver floor. So it's a sedimentary deposit originally. Becomes metamorphic after 1 billion years, but it's sedimentary initially with an angle of repose of no more than 20 degrees. So these things were essentially flat lying when they started. They're all vertical now, and I'll get to that in a minute. But they start out flat lying, and we have modern day ones today off the coast of Japan and other places where you have modern day island arc environments. So that's what this is. This is almost 2 billion years ago. This is old stuff, okay? These rocks are old. They've been around forever. And that's what Iron King is interpreted to be, is a VMS deposit, volcanogenic massive sulfide. It's not what McCabe is, but I'll get to that in a minute. While we're on the geophysics here and why we're excited about this target, which we'll have to get to eventually, we've got so many targets. It's a great problem to have. It's a Hollywood problem. We've got lots of targets. This is interpreted by our geos is actually more proximal to the heat source. Typically, copper and gold precipitate out first in a VMS system. This would be the more distal part of the system. So we're encouraged by that. This is exploration at its finest. It's it's interesting. It's in a known VMS district. You've got the Iron King mine, you've got the United Verde mine, you've got the K mine, you've got you've got all these VMS deposits strewn across this 100 kilometers. There's going to be more, and they probably won't all be found for a very, very long time. But the point I'm making here is it seems like we have an interesting one. Although this isn't why we bought the project, it's certainly something we're going to have to follow up. Zooming in on the copper project, where I showed you some of those grades, just zooming in, this is just from outcrop. 450 grams silver, 4.5% copper, nearly 30% copper, 650 grams silver, nearly an ounce per ton gold. So really, really encouraging. This is at outcrop. Surface samples coincident with a geophysics anomaly, but it's exploration, and it's just something we have in the portfolio that we would love to get to. So that's really it. That's the project. In summary, again, high level, big points. This is a past producing mine. It has been completely rehabilitated to world-class standards by BHP. In fact, that's why it's in the 1996 BHP annual report. They say, this is how you do it, folks. And that's why it's in a BHP annual report. BHP was a very big company even back in 1996. So the fact that they have this in there, just because when we do get asked the questions, if this is going to be in production again, what's the rehabilitation plan? I say, well, the plan will look a lot like it does now. You can drive around our property, and I challenge anyone to show me where the dumps are and where the shafts are, because you got to be careful. They don't stand out. These are covered, and of course they took the greatest care and safety. But yeah, it's been rehabbed very well. So our objective here is high grade. It's a place we know you could put a mine back into production, and really exceptional exploration potential with significant insider ownership.
Okay. Wonderful. Great presentation. Byron, you're up first. Go ahead. And if you have questions, just raise your hand. We'll get you in order.
Okay, thank you so much. Kevin, this presentation was fabulous. You absolutely told a story, which to me was engaging, exciting. I'm going to go out and buy some shares. I can't wait for my next trip to Arizona, because I'm going to call you up and I'm going to drive over there, and you and your guys are going to show me around. You have put together. I mean, I have not seen a rock yet, but I mean, from what you're telling us here, this is a really exciting exploration story with wide open upside. I love how you brought the history in, and I love how you kind of differentiated why did those old guys do what they did, and what did they leave behind, and what is there left to find. And it's exploration, and you never know. You're only as good as your next drill hole. But I think you've really put together a really nice package here, and I commend you. I have no criticisms other than to say that it's just so good. I don't know. It's just one of the best presentations I've seen in a hell of a long time. So congratulations. Thank you.
Well, thank you, Byron. It's certainly, those are very kind words, and it's certainly appreciate. Thank you very much.
All right, great. Thank you, Byron. Gary, you're next. Go ahead.
Kevin, thank you for the presentation. I echo a lot of what Byron said. I love the great management financing. I mean, it really shows how much you believe in the project, and it's quite different than many of the ones that we've seen. One of the questions I have: what's the plan to expand the known historical resource estimate? And when it comes to risks there, I think I heard a couple of risks that have occurred over near those shafts, around those areas. When you are looking to prove the resource and expand the resource estimate. What risks are you expecting to run into, and how do you plan to mitigate those?
Yeah, for us, it's geological and drilling. The nature of these deposits are that, they're abundant, they're high grade, but you have to drill to hit them, right? It's not a uniform body. So when you're drilling something that's 300 meters below surface, and when you add the angle and everything else, and you're drilling 400 meters to hit a target that can be 5 feet wide, um, the reward is massive, but the risk is hitting these things. We know it's there. I mean, we're confident. I should say, I've got to be careful. I can't say I know it's there, but we're confident it's there. It's a matter of, can we hit it early, right? Can we use our drilling dollars to the best of our ability? And it's going to honestly, it always takes a little bit of luck. And we're going to use the best geoscience we have. But at the end of the day, you got to hit the thing, and you got to show it's there. So for us, it's how good is it? It's geologic. It's truthfully, it's geologic risk. It's a phenomenal exploration project. There's mines all over the place. How quickly can we turn those drill dollars into shareholder returns is really, for me, we want to hit big and we want to hit early.
When you are factoring, the growth, the returns, et cetera, when it comes to the silver credits as it pertains to what was there at the McCabe mine before you added these 3 new mines, how integrated into the project economics was the silver credits, and is that part of the reason why you expanded, instead of putting the money into drilling, why you expanded to these 3 silver mines?
The economics, it's a good question. The 69 grams per ton in the historic estimate, although at $80 silver is a sweetener, that's a sweetener for sure. But when you look at it in the terms of the 15-gram head grade, if I reverse calculate the recoveries, as I mentioned before, and you get reverse engineered to more of a head grade of 15 grams, the silver credit would be 1 to 2 grams. So that's how the economics would shake out. So it's a sweetener, but it didn't drive the economics for us. As everyone will know on this call, I can't say this is a 43-101 resource. I can say that it has a historic estimate and it was in production, so I know the production grade. That's a fact, right? So what I do know for our economics is, if the economics are still, which this thing has been around for 100 million years or better, and this being the more recent laramide orogeny McCabe deposit, the gold's still there. And if it's still, so that won't have changed. So if the head grade for us still 15 grams, our economics are phenomenal. As long as they, holds together at an economic mining width, which it always had in the past, the economics are phenomenal. So the silver, although is good, it's a sweetener. It's not the driver on the McCabe. Gold is gold, and that's going to be the driving factor on that one. But to your point on why did we do the silver deal, it's just they look too good. They're past producers. They're running 15 to 20 ounces per ton. They were only mined down a few hundred feet, and we know because based on Iron King, which is 2 kilometers as a crow flies, that was mined to a kilometer. So for us, we think it's an incredible bet for our shareholders that if the 800,000 on McCabe is over 800 meters, we just acquired 1.5 kilometers of high-grade silver assets. We believe that the potential return is something that shareholders should have if we could do the right deal. And we believe we did the right deal.
Thanks, Kevin.
Thank you.
Okay, great, Kevin. Thank you. Lawrence, you're up next. Please go ahead.
Kevin, great job in pulling this project together. It clearly looks like it has enormous potential, and you've got a massive database to build from, and obviously very impressive grades here. Now, the one thing that I'd like you to elaborate on a bit, if you could. You mentioned it briefly, the mining widths. This is going to be an underground mine, clearly. And can you just give us some indication of what the vein widths are and how that might relate to a mining width?
Thank you for your question. It's a good one, and it actually brings me back to something I wanted to mention when I was discussing the historic resource. Based on what we've read from the materials that we have, like annual reports that were published by Stan West, what we read is mining widths of 4 to 5 feet. Okay, that's what we read in the historic record. And of course, it's going to pinch and swell and ebb and flow as they all do. So that's one. Now, the other part of this, which is I haven't mentioned, I think and in fact, it's really, really important, is that historic estimate was done at a cutoff grade of 6.8 grams per ton. And as you and your viewers will likely know, if the grade on the intercepts wasn't 6.8 grams or better, it just didn't make it into the resource. So to your point of how wide the mining widths are, this is something we're going to have to learn from our own drilling is when we get into the zone, when we get into the structure, because this is a structurally hosted mesothermal system, is there grade in the hanging wall and footwall? So when we lower the cutoff grade to something more amenable, maybe 2.7 in the high twos, is there more width? That is, maybe there's 4 or 5 feet of 4 gram or better that could be mined, and that could widen the width, extend the width. So that's a great question. And we're going to be learning, but hitting the historic record, they said they were mining between 4 and 5 feet.
Okay, at those grades, you can certainly afford a bit of dilution. Great, thank you.
Okay, Lawrence, thanks so much. Graham, you're up.
I wanted to compliment you on your share structure. This is one of the best share structures I've seen for a mining company. You've got only about 30% available to the public. With that in mind, when the current funds are used for the drilling program, how do you plan to raise additional funds for phase?
Well, we're going to do what everyone else does. We're going to go out and tell the story. The story's only been public for, we started trading, I think it was March 31st, and correct me if I'm wrong, but I think it was around March 31st or April 1st. So the story's new. In fact, the company's only been around for a year. When we did this deal, I went out and raised privately almost $14 million in private funding from 50 cents to $1.20. So we have a lot of high net worth individuals around this name. And when I asked these guys, I said, we're going to do this silver deal. And should we do a financing? And they said, don't worry about it. We're supportive. So, look, obviously we want to broaden our shareholder base because we want liquidity and we want good, of course we believe we've tapped our high net worth network of, very supportive and, guys who get mining. So yeah, we're gonna have to market the story, and we're gonna, have to raise equity at some point to fund a larger, more significant program. And of course, our hope is that we get the right shareholders. Really, it's about getting the right shareholders as opposed to just getting money. We've got a great story. We've got high grade. We're in a great jurisdiction. So it's our job to attract the right investors.
Okay, great. Steve, you're up. Go ahead.
Thanks for the presentation, Kevin. And congratulations on the ability to go and raise the money and put this whole company together. I think that a lot of people in the audience may not realize how challenging it actually is to have gotten to the point that you've gotten to. So congratulations on the success you've had so far. I want to zoom in on the 3 mines or former mines that you acquired. I'm just curious, how much historic data do you have on those mines, and how can you utilize what you do have to go and make another discovery?
Well, it's limited data. I mean, this is kind of the stuff we get. It's, a long section of where's the lookout, for example. The lookout's down here. This one's closed. We own it in the Idaho. So we have these ones, and we've purchased these 3 ones, and there's some more up here we can do likely. But How do we use it? Well, we know where the shafts were and we know where they mined it too. So phenomenal exploration tool. We've sampled them. How can we use this? We would likely just go in, like for example, at Lookout. This is only 500 feet. This is a very shallow drilling program. We'd likely go in and start punching holes in here. I'm not I don't want to speak on Clyde's behalf, but given my geological background, what I would likely do, I'd start punching holes in here and maybe in here. So that's what we would do. We'd use the shafts as a guide. We don't want to hit underground workings. So we got to steer clear of that because you don't want to punch a hole looking for 7 feet of 20 ounces per ton and hit timber and air. So we would obviously manage that, but we know this ran because we've got the data. And the question is, and you know what we're seeing, as I mentioned, we're seeing some samples on surface that are extremely high grade, but they're not oxide, they're sulfide. So once they hit that transition, they just threw it away. It was running half an ounce gold. So what would we do? It's a great question. We'd go in here and we'd probably just start pounding holes around the shafts, but below them, and more in the transition area. See, like the metallurgy here, we know it works because they mined it. It's conventional CIP, but the oxide sulfide transition that in 1930, they didn't, if you didn't have a stamp mill or some other way of recovering the sulfides, which now it's done every day and it's a very simple process, they wouldn't do it. So yeah, we would use probably these shafts as our beacon and go from there.
Okay, that's great.
Thanks, Kevin.
Lau, thanks, Steve. Lau, go ahead.
Hi, thanks for the presentation. I think you mentioned Monday silver acquisition, as you said, nearly doubles your strike length. So I was wondering what does that do in terms of drilling? Does that pull your next race forward, or does the current program still carry you comfortably?
We fully funded a 4,500 meter program. That's probably going to be around 12 holes. I don't have we punched, I'll go back here. Thank you. It's a great question. Go back to this. Maybe I'll go back to the slide where I can show you the holes. It's down here. Apologies for zipping around. This is where we started the first 6 holes, which is over here outside the resource. And we've moved the drill for hole 7 to drill Little Kicker. And really, to the point on the silver assets, how are you targeting your zones? Well, we know a shaft was here. We know they mined oxides to 3, maybe deeper than this one, maybe 500 feet. So we're going to punch a hole in around that at depth below the shafts, not hitting into the workings. So how did the silver, well, it's like our copper, Lau. It's like, this parallel structure, which we know we have ½ ounce per ton at surface here. We know we have it. We sampled it. So this is, I don't know how much is here. I mean, this is 1.5 kilometers, I want to say, of strike. We've got the adventure system here, which is another 1.5 kilometers of strike. Like we've got on private ground, with the silver mines now, 8 kilometers of strike. And it's like, well, where do you drill? Well, yeah, great question. I mean, I've got high grade historic mines everywhere. So literally it's where do you drill? And what we did was, well, we got to drill somewhere. So we started on the northeastern extension of the past producing McCabe mine. And we kind of went looking for one of the zones that they had lost, to be honest. And that's why I said we know the details of the fault. I'm just going to say that we know it's so we're learning as we go here, right? This company's very young, again, only 12 months old. 12 months old. We've assembled 400. We're the largest landowner in the history of this project. 420 acres of private ground. 4,000 acres of BLM ground. We've consolidated a district. We've ran geophysics. We've improved the roads. We've got 10 drill pads. We got a drill turning, and we've raised almost $14 million. And we did that from March 14th, PDAC 25 to today. We've done all that. So we're public now. We got a currency, and I'm getting the questions like I'm getting from you, from shareholders and from others is, why is this 60 million market cap? And my answer is, well, We've got to show that we've got to hit some holes. We've got to show it can grow. And no one knows the story. No one really knows the story. I mean, you're all on the call here to learn the story. And I really believe it's an investor awareness. Again, we're shareholders. I mean, all we care about is our shares. And we're going to do, let me come back to how will we drill the silver project. It's going to be a high priority target. And the market pays us to drill, Lau, we'll drill. If the market's paying us and we got a currency and we're raising money, more drills. And I believe more drills will lead to more success, which will probably lead to more drills. That's how I would see it unfolding.
Okay. Thank you, Kevin. One more question about drilling. You also mentioned that your deepest historical intercept, I think, was at 480 meters at 19,
Right
was
here.
it 19 grams per ton?
Correct. 1.4 meters of
Yeah.
19.4 grams per ton. That was drilled very shallow depth from the 1450 level that was sunk here. That was the extent of the Sooner shaft. Yeah, right here. Bam.
Yeah. Okay, so it wasn't below the mine's deepest level.
It was.
It was.
Yeah,
Okay.
it was drilled from the mine's deepest level here.
Okay.
And
So
they hit it, yeah.
I'm wondering, is any of this year's program is designed to chase that depth, or is it all strike for now?
Right now, the program is focused on, as I mentioned, yeah, like good question, very good question. And again, Lau, if I had 10 drills, my answers would be different, but I'm working within the constraints of a 4,500 meter program. And what we did was we decided to start here. So 6 holes here, and now we're over here. This is historically high grade gold. We're drilling here. So, we didn't have a huge budget for our initial program. We really wanted to get the awareness out, get the story out, and then see where we go. But and we really wanted to show, we're not just going in here and hitting stuff, because I've been asked that, by investors and certainly by shareholders. Well, why don't you just go in and drill this? Well, the market's going to say, well, you're kind of cheating. That's, you're going in and hitting the low hit. We want to see what they'll say is, and I know what they'll say because I did the job for 25 years, because it's what I would say. Why don't you show me it's out here? And why don't you show me it's out here? And that's what we'd like to do. And obviously, our job is to show it's everywhere. Like I would like to show we hit here, 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 here. Like this is almost 5 kilometers of strike. I mean, that has many million ounce potential. And it's open, and we can show it's open at depth. But as you know, Lau, this is expensive. It's drilling, and you can only do what you can do with your budget. So bigger budget, more drills. I feel more success. And I think that's where shareholders get the returns. I've seen it many, many times before. You've seen Southern Cross and Great Bear, and at the risk of name dropping, right? Newfoundland Gold, like they put a lot of, Southern Cross was spun out, I think, for $5 million. And now it's over, they've had phenomenal success. But these things always start somewhere. And they always start somewhere. And it always comes back to gold. And now it's coming back to silver. And I think this project has the potential to really reward investors. I just believe that. And, that's why we did it, and that's why we invested.
Okay,
Thanks, Kevin.
great.
Appreciate the honest answers. Thank you.
Thank you, Lau. Brian, making your first appearance here on the roundtable. Thanks for joining us. Go ahead.
Thanks, Matt. Hi, Kevin. I was wondering, what is your cost of capital for your shares?
Well, that's a good
Or
question.
the average cost, I should say.
Okay. Most of the money, I would say, was raised at 50 cents. I invested $1 million at 50 cents. We did $8 million at 50 cents. That was when I did the initial deal. And in fact, I got some high net worth, very supportive shareholders who I've known for better part of 25 years. Said, can I get a little more? And I said yes. So I went out for 5 and I raised 8, and I raised it in 10 days.
And so your current cash position what is that right now?
It's approximately $2 million.
Okay.
We're going to finish the phase 1 program here. We're about 70% of the way through it, and we'll exit that with around $1 million. We don't take salaries. We don't have offices. It's all, we all, our, our chief geologist, one lives in Seattle and the other guy lives in outside of Denver. So, it's everyone works remotely. There's no expensive offices to pay for or salaries. So we run a pretty lean ship.
And the six holes that you've drilled, are you expecting to get oxides and sulfides in those results?
I don't think we'll see oxides. It's too deep. It's going to be sulfide mineralization. Yeah, for sure.
Okay.
Sulfides. Yeah.
And out of those six holes, how deep did you go?
On a vertical basis, 400 meters, probably the deep in around there, probably the deepest spot, 400 meters vertical.
And what is your all-in
400,
cost?
350, 400.
Okay. And do you expect that to be pretty consistent throughout the other drilling you're going to do?
It will ebb and flow. I believe the hole we're drilling at Little Kicker is much shallower.
Okay.
It'd be closer to 200 meters vertical depth, be my guess. Talking to the geos, I think that's the target. It's around 200 meters. So it depends on the target. A lot of our target, yeah, as I showed you from the silver assets, I mean, down the road, again, it's 5 kilometers of strike. There's going to be, and we've got, well, it's more, it's 8 kilometers of strike with the multiple structures. So it will depend on the target.
Okay. And when do you expect the assays back for those first six holes?
We've gotten some back, but we haven't got them all back.
You're going to release those all together or in batches?
That's a good question. And that's an ongoing dialogue with the board. So we'll see.
Okay. And so, of course, I guess with getting down to $1 million, you're going to look to finance off the back of that.
Again, if I can't discuss financing decisions without disclosing it to the public.
Okay. I'm just saying, like, down to $1 million, there's only so much you could do moving forward, even with like a pretty decent. What did you say the cost was? Did you say the cost was 350 per meter all in?
It's about 400
About 400.
Canadian per meter, Canadian dollars. So
Okay.
300-ish US per meter. Yeah.
Okay. So it's safe to say you probably want to finance. Okay.
We're in the game of raising money and drilling holes, Bria.
Yeah.
That's the game we're in. Yeah. So
Okay.
down the road we will. I mean, obviously our objective is, I've raised 14 million privately, very supportive shareholders, but really the objective is to, expand the list. And there's so many potential investors out there, funds that haven't seen the story. We're going to start a marketing tour a little bit here. We're going to do a couple conferences and continue to get the story out. And the beautiful thing is we have such a low burn rate that we could do a 5,000 meter program on those silver assets and it would only cost us $2 million. So, we like to be flexible, and obviously we are protecting our share currency as best we can. So, obviously, we're looking for bang for the buck, right? So, yes, we will certainly need to finance to do more drilling.
So in terms of strategy, when money does mean as much as it does, and you bring on these new silver projects, how do you prioritize between the gold targets and the silver targets? Like, how do you ensure that you're getting that return on that last dollar? If you only have $1 million, how do you decide how to spend it?
Well, that's a good question. We've got a team of experts, and what we do is we take all the data we have and we get the smartest people we have in the room to review all the data. And then based on that review and based on all the information, we do our best to make the best decision we can possibly make.
But you don't know at this point right now whether the silver projects would trump the gold targets with that last $1 million.
Well, I can't tell you what's there until I drill it.
Oh, well, what I'm saying is you have to be able to prioritize between the two, right? So whatever data sets you have, like what does it look like right now? Which looks like the better target or the better bang for your buck?
I would say that, I mean, you know, this McCabe gold system's running, based on the historic estimates, it's running half an ounce per ton gold plus silver. The silver, based on the historic record, is running 15 to 20 ounces per ton silver. So you would have to get our calculators out to say, well, which one's better? And the reality is it's really quite equivalent. So right now is we're drilling the Little Kicker. So it's an excellent question, and you're really making me think, and I appreciate that. We just
Well,
added these Monday, so it's gonna, results will drive decisions also, Brian, to a certain extent, right? So results will drive decisions. I can tell you from a personally, and my vote is I really want to drill those silver projects. And you know what? If I got to put my hand up in the board and with the team and say, you know, but again, if they go, oh, Kevin, we just hit X over meters over, at the little kicker hole, I'm like, well, now I have to weigh that into consideration. So I don't know. It's always evolving, but I can certainly tell you, I
I,
really like this drill the silver. Yeah.
I'm just trying to understand why. Like I get what's at surface. I get. I don't understand how you prioritize. That's what I'm trying to figure out what the strategy is between the two. Because like right now, I see sort of how you've started drilling and how you're going to the extents, and that makes sense to me. And like you said, I guess you can draw a parallel between a historic estimate and saying that maybe 70% of that or 80% of this probably there, given what modern expectation is. But when you start comparing these other places like these silver mines, it doesn't seem to be as straightforward, at least to me, that they would prioritize over the gold targets. And I'm just trying to figure out how you would kind of separate that too, outside of the narrative, which is definitely stronger on the silver side, I think, from the silver bug point of view. But
Yeah, there's certainly that aspect to it. I mean, what's changed, right, since we did the initial gold deal? Well, when we did the initial gold deal, gold prices were around $2,800 per ounce when we did the McCabe deal, and we staked all the ground and began the process of spending, clearly almost $8 million buying private ground, us consolidating the district. And so what's changed? Well, if I'm going to be completely honest and just state the facts, silver's gone up more than gold. Right now, there's more excitement in the silver space than there is in the gold space. So again, again, I'm one of a team, but if you're asking, how do you prioritize? Well, I would take all that into consideration and likely, and I don't want to be held to it because I don't know what the results are going to look like from these other targets we're drilling, and we've only started. We've only drilled 0.01% of our project. 0.01% of our project is being drilled with these 12 holes. So yes, it can be very challenging to go, well, which one do you drill, Kev? Well, if you want an answer out of me, I'm going to say I want to drill the silver targets because they start shallow. We know they're high grade. They're on private ground. They've got a lot of excitement, a lot of sizzle. If you're asking me for my vote, Brian, I vote silver is what I'm probably going to tell the board.
okay.
Okay,
Yeah.
that's great. Thank you, Brian, very much.
Thank you,
Just
Brian.
running a little bit late, but Dominic, go ahead, please.
Thank you very much. And we were just talking the other day after a presentation about the need for a CEO who can tell the story. And you've demonstrated, Kevin, you told the story brilliantly. I've just got a couple of questions. The 14 million that you originally raised, 8 million of that was at 50 cents. Was the rest of the money raised at a higher price or a lower price?
We've done a series of raises. I got a 5-cent round where I bought 2 million shares. And then I got a 10-cent round, and mom and dad got some. My sister got some. There's a few friends and family that got some 10-cent shares. Then we did the more meaningful, which I put $1 million in as well at 50 cents. Then we did a $1 round where we raised, I believe, $1.3 million. And then we did a $1.20 round in November, where again, me and the board and the team put in $1.5 million at $1.20. And that came with a $1.50 warrant. So that's really, I got a little bit of 5 and 10 cent shares coming in as CEO. That was
only you got the 5 and 10 shares, and your mum and dad.
5 cents me, 10 cents. It was a list of maybe 10 people that got $10,000 each. It was
great.
just like friends, and not friends really. It was family members. It was I could give you the list. I'd be happy to share the list with you.
It's all right.
But it was about
you've said enough. It's fine, Kevin. Thank
Okay.
you. And so you've raised 14 million in total. Just tell me roughly you, how much has gone on drilling and how much has gone acquiring the assets?
Excellent question. The budget for the drill program is approximately 2 million Canadian. And what's gone into the projects to date in terms of asset purchases is closer to 7 million. And the rest is to lawyers and to exchanges and to consultants and to all that other stuff.
I understand.
We haven't taken a dime out of it. It's 4,500 meters, and it ebbs and flows depending on how deep the hole is. But yeah.
So next question. You said you're not taking any salaries. At what point will you take a salary, and will you back pay yourself?
That's a good question. I haven't thought about back paying myself.
Put the thought out of your mind.
I didn't think about that. That never crossed my mind. When would I take a salary? I don't know.
So there's no intention as yet for any of the board members to start taking a salary.
Well, the board members aren't taking anything. They're going to get options, which will be done in accordance to whatever the latest studies say or whatever. But I haven't thought about a salary. I would think if we are fully funded and I feel really good that we've done an exceptional job and the company has a solid treasury, at that point, I may talk about a salary with the board. But my primary focus is making sure my investment generates a return. And if it's all whatever's best for shareholders, that's what I'm going to do.
Okay. And so and just tell us why you haven't released the drill results that you've had already yet.
Drilling's ongoing, and
I thought you actually had some results that you hadn't released yet.
Yeah, but we don't want to put out like one hole. That's the board's view. We've got to determine how we're going to release results so that we can paint the right picture. Obviously, right? We want to paint a picture. We don't want to dribble and drab. We're an exploration company, and we got to drive a little bit of excitement, right?
Okay, so you're going to have $1 million left when this drill campaign's finished, and you're going to have to decide whether to stick that $1 million into the silver asset or into the gold asset or into a bit of both. Just describe, like you're going to have to raise some money. It's mining. We all understand that. And that's going to involve a little bit of dilution. But just let's just say you don't hit the mother load, but what you hit isn't bad. Your drill results are okay. Just describe to me how the next couple of years are going to look.
Well, it will depend on how much money we have, right?
Exactly. But that's what I want to know. That's why, because I want to know how much money you're going to have is what I want to get an idea of.
Yeah, I don't have the answer to that today, Dominic. I don't have the answer. I mean,
okay. Give me an idealized version of how the next 2 years will look.
Well, we haven't announced a phase 2 drill program. So if are you asking me to speculate on what I would like it to look like?
Yes.
Okay. What I would like it to look like is, we are successful in our phase 1 drill program. The market starts to recognize the value of our projects, and we're able to attract the right investors at the right price. And let's say we could raise a program that would be significant enough where we could have 2 drills turning. I would, again, this is subject to board approval, but I'm just giving you how I would like to see it go. I would like to see at least 1 drill going on McCabe, at least 1. And I'd like to see 1 drill at least going on the silver projects. I would add drills depending on, cost of capital, to Brian's earlier point, cost of capital. If the cost of capital is, I believe, fair and we're being treated, for what we have and we have the right shareholders wanting to invest the right money, we would expand it. So what I foresee is a drill on McCabe and a drill on the silver projects.
So you want to raise a lot of money and just 2 years of mass drilling. Is there a long wait for drill rigs where you are?
No, we're good. We're good. We have good relationships with our drillers, and we've used them before. So yeah, we've got access to drills. So that hasn't been a problem.
And I mean, over the next 18 months, say this is an out and out drill play.
1,000%, exactly right, Dominic. It's a drill play. That's exactly right.
That completes my questions. Thank you, sir.
Okay,
Thank you very
Donna,
much. Appreciate it.
thanks so much. Nick, you're up, and then Doug, and we'll wrap up.
Great. I'll make it quick. I know we're running short on time. Thank you for your presentation, Kevin. I just want to go over a couple of things and confirm with you. So you've got about 49 million shares outstanding, about 4.7 million warrants, and about 2.6 million stock options. Is that correct?
That sounds right. The stock option sounds high. I think we've got
Okay.
2.
Okay, in any case, that looks good. It's a, a relatively attractive structure here. And then how much cash do you have right now? And how long do you expect that to last you until you need to do another raise?
Yeah, so we've fully funded our phase 1 drill program, and
Mhm.
we're about 70% of the way through it. We put 6 holes on the eastern edge of the historic resource outside of the resource, and we're on hole 7 now, and we're drilling on the far end, about kilometer, at least a kilometer away from McCabe, on a different target, and that's hole 7. I suspect with our first phase 1 program, I'm hoping to get 12 holes, depending on how the money goes and how the drill operates and how smooth it goes. That's our expectation. So we're about 70% of the way through our phase 1. When we complete phase 1 in, likely June would be my best guess at this point, we'll have approximately $1 million in the bank-ish.
Gotcha. Okay, that answers pretty much everything along with the other questions. So thank you very much.
Okay, thank you, Nick. Appreciate it.
Thanks, Nick. Doug, wrap it up for us. What do you think?
Okay, well, I'm very impressed with the whole thing, from the presentation, which was excellent, on down. The people end of this equation seems to me to be excellent. The property end is great. So many of these companies are buying properties on terms. You've paid cash for it, and the property itself, I find very interesting. All those old shafts, and a lot of apparently grab samples that you're finding on the surface. It makes me wonder whether this property isn't suitable for, I know you're not thinking of this, but all the great grab samples, high grade, that you're getting on the surface, and the presence of these old shafts, it kind of reminds me of Robert Friedland's first project, which was the Summitville mine, which was almost a cleanup operation with so many old shafts and tunnels in it. He turned it into an open pit operation. Is there any possibility for that to develop?
No, I mean, I appreciate that. But no, we would be, I know, and I hear you, there is a lot of surface sampling that has a lot of gold and silver and copper in it. But this would, well, I can never say never, but this would be really a high grade underground, 1,000-ton, maybe, they could double it over the years, but it'd be really, 150,000 ounce producer underground mine. Now, I don't know what this copper thing will look like ultimately, so I never say never, but really it's high grade underground.
So ultimately, are you thinking of mining this yourself or selling it to a bigger company?
Well, those are both great options. Those are both great options, and you can never force someone to buy you. So our job, Doug, is drill, baby, drill, and let the truth machine do the work, and pray for good results, right? Like, Mother Nature's been at work here, and the truth machine, and ideally we get it right and we hit some good zones and we show there's more and more and more, and success will breed success, and we'll get access to capital, and then we'll get more drills going, and then we want to know what we got, just like everybody else. We got a ton of smoke, and we want to see what we have, and then we'll figure it out from there. But what we do, we're going to do the best decision for our shareholders. I can tell you that.
Well, and I actually appreciate now the way that you're financing this, because hopefully you're going to be able to finance your next round, which you'll have to do at a higher level, so that you should be able to finance in smaller tranches at higher levels each time.
And I think with this property and everything that, you know, I don't find any fatal flaws in anything that you've said so far. It's a really interesting project at a very reasonable market cap with a lot of upside potential. So I've got to say, I'm pretty impressed.
Doug, those are very kind words. We appreciate it. And, you know, your assessment's no different than ours. And that's why we did it. We've looked at a lot of things, and I know you guys see a lot of things. And we'd rather wait and do the right deal than do a bunch of bad deals. And, you know, not to mention, you know, so we do our homework, and we're all in here. This isn't one of 5 companies we have. This is the company.
I know, and it's mostly your money at this
And it's
point, too.
mostly our
So
money.
this
So
all
look,
speaks very well.
yeah, you know, I appreciate it, Doug, and that's what we've put together because we want to buy what we buy. You know, shareholders are going to want to buy what we want to buy, right? So we feel like we've put it together and we've done our homework so that we know that if we are successful with the drill bit, this can actually go into production. I've seen so many stories over the years where they spend $50 million in drilling and they can't get a permit. And I don't need to tell you guys because I know you've seen those as well. It's work backwards. Work from a place that you can actually put a mine into production. And you know, we did that, but we're doing it with a mine that had extremely high grade gold. And it's not 43-101, but this is the opportunity for folks like us who buy the shares and for investors to buy the shares. Because if I walked into you with 1,000,000 ounces at 13 grams or 12 grams, 43-101 on a private piece of ground that used to be a mine off a paved highway with a power line and water, it wouldn't be 60 million Canadian. It'd
No.
be 900 million Canadian. So this is the opportunity that we're chasing. And look, you know, praying for results. So that's where we're at.
All right, Kevin, that's fantastic. Thank you so much for the presentation. I'll ask you to step out at this point, but yeah, really appreciate it. It was excellent.
Thank you, gentlemen. I really appreciate your time, and I certainly appreciate your questions.
All right, thank you. All right, guys, take 2. Very good presentation, I thought. What feedback you have, EB? What do you
Look,
got?
it looks, yeah, I mean, it looks better. I mean, honestly, the one thing that really jumped out to me, and having served on a lot of boards with these companies and dealt with a lot of frustration with sort of how people run these things they run it for themselves, is that I really think they're going to step up the raises slowly. And if they do that, I don't think it even matters how much they spend, because they're not going to spend until there's something to spend on. It's just great. It's great. You know, so 60 million Canadian market cap, like 45 million US or something like that. That, to me, that seems like pretty low risk for the setup. Now, you know, I think if that starts running a bit, you know, then you take a different sort of look at it. But this is early days, and you got a bunch of guys that they didn't do this, you know, for like salary money. So I'm pretty interested. I mean, let's not even forget about, you know, it's American soil. I mean, this is about the best time ever to be. It used to be you had to be in some faraway place. Now it's like, you know, this is the time to be doing this. I mean, this thing might, if they hit 1 or 2 things, I don't think raising a few million more is going to be a problem. It's tight. It's pretty tight. I mean, there's not many warrants. This is the time is now on this thing, I think.
Okay, good. Yeah, Dominic and anybody just jump in
Yeah, I would just add to that, you know, he's one heck of a salesman. And, you know, I like a salesman, you know, he can talk, I don't know if he was a Canadian or the US, but we say he can talk for England. He can talk for the US, that guy. You know, he's a great talker, and he's a great salesman, and he tells a story. But and as EB says, just being in the US now, it's right place. And he's set the deal up for himself, and why shouldn't he? You know, he's given himself some cheap stock, but he hasn't given himself that much. And so, and you know, the management is allied with the shareholders, which is something you don't often see. And But what really excites me, my one concern is they've only got $1 million after this drill results over, so they are going to have to raise some money. So he is going to want to get the share price up, and if he can't, well, he's going to have to raise a bit of money around $1 or $1.20 when he might prefer to raise it, $1.50, $2 or something. But I just like the fact that the story's new. When a narrative, sometimes you just get stories that are old and they just run out of energy and they're just stale. Whereas this is a new story, so he can get lots of people excited, and he's got the sales ability to get people excited. So a little bit concerned about the cash position, but apart from that, it's hard to find a box that this one doesn't tick.
Yeah, Byron, go ahead.
I'll just, excuse me, I'll just piggyback off what Dominic just said. It's a new story. It's a new old story, but okay, it'd be nice for him to have more than $1 million. That's not going to be a problem. I mean, where he is, the upside of one or two good holes is gonna just bring in the money. And I love the geology. I love the historical part of it. I love the old timers dug down this deep and they left everything else below it. It all makes perfect sense and it all comes together. This is a very tellable story. It's a very saleable kind of story, and it has the benefit of being like a real story. There's like geology there, and it's doable in the sense like you got roads and power lines and stuff. This is all good.
It could be a meme. It could become a meme stock.
I'm sorry.
I was just going to say it could become a meme stock.
Yeah. So I appreciate hearing this story today. It was really an hour and a half well spent. Terrific.
Yeah, he did a great job. Anyone else have anything they want to add before we wrap up? I know we're right at our end time.
I almost never buy stocks unless it's on a financing, but I'm tempted to buy this in the open market.
Yeah, me too. Me too. All right. Well, guys, thank you very much. I really do appreciate it. And we'll see you next time. So take care.
Thank you. Bye-bye.